I'm talking with Larry Williams today about his indicators exclusively in TradeShark. We're going to focus today on the Commitment of Traders report. It's very important, and Larry's got some things to say about that. It's put out by the CFTC, and a lot of traders are looking at it these days. Larry, a lot of traders are looking at it these days, but they may not know what they're looking at. Talk about, first of all, why the COT report is important.
The Commitment of Trader report is published once a week by the United States government, one of the good things that the government does for us. And it tells us, it breaks down into three categories, people operating in the marketplace. First of all, a group we call the commercials. These are the people actually use or produce the commodity. So it could be, say, somebody that's growing wheat, or it could be Pillsbury that's using wheat. That's the commercials. Then there's another group of large traders. That used to be people like myself that traded in large quantities. In today's market, though, that's really the funds. We have a lot of funds now trading, and they're primarily trend followers. So that's the second group. The third group is the average trader. That's called non-reportable positions or small speculators. So it's small specs, large specs, and the commercials. Those are the three groups. The important group that I've noticed over the years is the commercials. I first started to write about that back in 1970. Literally the first person who ever wrote about it. There was one little tiny article that I stumbled across in about 1968 about somebody in the industry was talking about commercials, and my mentor, Bill Meehan, who had been a member of the Chicago Board of Trade, said, "Larry, it's all about the Commitment of Trader report." And he explained to me, the Commitment of Trader report is invaluable, but you need to understand how commercials operate in the market. They don't try to buy the lows and sell the highs. They're hedgers by definition. Once you understand their hedging and how they handle price, it's an invaluable indicator.
So what have you done within TradeShark to make it easy for traders to digest that information and take action on it?
We've made it easy to use the Commitment of Trader report by putting into indicators. And the important thing isn't just an indicator. There's a lot of COT indicators out now based all in my book, all in my writings from the 1970s. However, it's the significance of the relationship of price to the Commitment of Trader indicators and the time frame. Because when you stop and think about it, obviously gold that can last in perpetuity, it probably has a different time cycle than hogs that are born and 18 months later they're killed. So there's an 18-month cycle, commercial industrial cycle in that market that doesn't exist in the gold market. So each market has a natural cycle and needs to be measured by the business cycle of that market. The stock is a good example. Stocks clearly have a 13-week cycle in them. Why? Because every 13 weeks we get earnings reports coming out. So you want to look at the Commitment of Trader report with a 13-week view. So the time period that you use for these markets, that's critical. And I've developed these indicators. My version of them, which so many people are following now, stopped working about in 1999. About 1998, we developed new COT indicators for the electronic markets. And there's a world of difference between the typical COT indicators and mine. I mean, it's a huge difference. Mine work, theirs don't. It's just as simple as that.
Now, you've talked about the commercials and why watching what they're doing is so important. Is the indicator about following what they're doing and piling on top of that?
Not quite. That's been some academic studies on it. Say, well, if you buy when the commercials are net long, you might lose money, and that's true. Because the commercials come into a market, they buy, and then as the market moves up, they will liquidate their position. So it's not like a light switch. Oh, the switch is off, the switch is on, or long, short. You have to understand. I have to teach people that. That's what the TradeShark people help people say. Look, the professionals, the commercials are accumulating. It doesn't mean we're going to rally now. Now think about this. If you're a commercial, you're Cadbury, and you're going to make a lot of candy, and the price of sugar goes down and goes down more, you're going to buy more sugar because you're still selling a candy bar for $3, but your cost of sugar is now less. It goes down more, you're going to buy more sugar and more. So they tend to buy weakness and sell strength. Remember, they're not buying to sell sugar, they're buying to take delivery of the sugar and use it in their product. So when they're heavy buyers, it says we have a condition here. It doesn't mean rush in and buy today. We still need to bring something like my trend measurements in to say, okay, they've accumulated, trend has changed, now let's get along this market. It's a combination of ingredients.
You know, a lot of people think about indicators as signals to buy, but probably just as important is staying out of the market when you shouldn't be in it. It sounds like this helps you do that.
Oh yeah, I've had a lot of losing trades, so I know that a lot of times I should have stayed out of the marketplace. Of course, you need to have something that says we're set up. Now we take a buy signal, a trend change. A trend change signal when there's no conditioning for a rally isn't going to work or won't work very well. So I want to find the condition. My gosh, the commercials, what a phenomenal condition. This is the biggest money in the marketplace. We know when they're heavy sellers or heavy buyers, that's our condition. Then you could bring in a trend measurement and say, okay, the trend's changing, now let's get aboard.
All right, and if I have questions about using these indicators, because there's a lot of complexity behind them, I know it's simple to use within TradeShark. What are my options? What do I do if I have questions?
Well, the biggest option, go right to your representative at TradeShark, and they can help you with the indicators. They can review it with you, and they've learned to do this not only because of looking at my work, because they've taught it to other people. So they understand this. So you're going to get support. That's what's really critical for me to give my indicators to somebody. I don't want you to say there's some indicators. I want people that follow my indicators to know how to use them and to have some support with them.
The trading decisions that traders make based on your indicators, do they need to start at a certain experience level or a certain dollar amount in their account? How does that work?
Well, you have to have at least $1 in your account. Obviously, you have to have some money to trade with. But your experience level, I think, my personal view, Tim, is it's better if somebody comes with no experience, because then they don't learn all these things that they have to unlearn later on. They have no experience in trading, go, oh, this is the rules of the game, this is how it's played, these are the indicators. It's like, oh, okay, I got it, this. It's much better to start there than have all these preconceived notions in your mind of things that simply don't work.
And I suppose you could use these indicators on their own, but do you recommend using several in conjunction to see their matching and see them that they're agreeing in what to buy or sell?
I like to have a couple of indicators confirm. I'd like to see that the commercials are long, that the public is short a market. So if we have a juxtaposition here, the pros are saying, hey, we should buy it, and the public is saying, oh, no, we want to sell it because they're usually wrong in the marketplace. Yeah, I want a couple, three things like that. Then I know I've got a good setup. When I was a kid, there was an ad on the radio for something called Anacin. It said, Anacin is like a doctor's prescription, a combination of ingredients. And that always stuck in my head as a little kid, like, oh yeah, it'd probably be better to have a combination of ingredients, especially when I started trading. Like, well, why would I want just one tool? I want a couple, three, easy to understand, easy to follow, that all speak from a different vantage point. One talks about commercials, one about cycles, one about the public. When all of those come together, coalesce, my opportunity for trade, the accuracy being correct, will be substantially higher. So I wait. I do a lot of waiting. I do more waiting than trading because I want to be successful.
Larry, thanks for your time.
Thank you, Tim.
We've been talking with Larry Williams, whose indicators are available exclusively in TradeShark.